We have some analysis now from Glenn Stewart. He joins us live from AG Edwards, and he joins us from the trading floor of the firm out in St. Louis. Glenn, it's great to have you on the program.
Good morning.
Welcome to you. And quite a story here. This is a case where a Democratic administration has basically said that this is too colossal of a merger, and the Pentagon seems to agree with it.
Well, it seems like the blue light special has gone out at the Pentagon. We've seen numerous mergers since the early 90s, and Lockheed had been the leader in a lot of these acquisitions. It just seems like the time and the mood has changed as the consolidation has really created a different outlook for the industry in general.
Glenn, in your view, was it justice pushing this along, or the Pentagon inside saying, look, this is just basically too much having these two giants form their company together?
Well, the arguments were led by Janice Reno of the DOJ, and as they saw it, there was just a little bit too less of competition if this company was to be consumed by Lockheed Martin.
A good restructuring that's taken place at Northrop Grumman. The stock has soared as a result of it, but now there's talk of it becoming just a subcontractor, that it will not be a major player. Is that overdone in the financial markets?
Well, of course, when the stock made its move over the last 6 months, you could kind of say it was overdone because the merger hadn't been completed or consummated. But given at this particular time, I kind of anticipate that the stock may pull back slightly some more today, continuing from yesterday's pullback of roughly $5, $6. With this news, it does not serve the price of Northrop shares well at all.
How about the idea that it would be just a subcontractor going forward? It will not be a primary contractor for the Pentagon. Do you agree with that?
Well, it's still going to be a key supplier to the Pentagon. I mean, they supply a very strategic surveillance, radar, and airborne surveillance type of technology, and it's very key to our type of defense programs, and as well as the way we combat our enemies, if you will. Their products and services are well needed.
Before we let you go, what is your top pick in this sector right now?
Well, right now we have been looking more so on the commercial side of things. We have been more so in favor of the Boeings due to the commercial upturn in their business. So if anything, we have a maintained rating right now on Boeing, but we're more so looking at suppliers that is in the aerospace, or more so the commercial side of the business. The defense side of the group, obviously we all know that the defense budget has declined over several years, but the only place that does show any significant growth is in the electronics industry, where Northrop stands.
Okay, we'll leave it there for this morning. Thanks for joining us, Glenn.
Thank you.
Glenn Stewart of AG Edwards out in St. Louis.
Glenn Stewart, aerospace analyst at AG Edwards. Good afternoon, Glenn, and welcome.
Good afternoon.
Let me just get your take with regard to this deal. This is certainly going to add a lot of competition to the global telecom business.
Yes, it is. This is a very highly sought-after industry. It appears to be growing at roughly 25% over the next 5 years or so. This is basically the services of providing data and voice communication worldwide, and specifically to third world countries where this type of communications is not apparent.
Does it mean that not everyone in the industry is going to embrace this, because this deal means changes for the industry and people are a little resistant to change?
Well, the resistance to change is not necessarily the issue. It's the point that the change will maybe put a few other companies in an anti or disadvantage. The change that we're looking for here is a change in a 30-year-old law, which does not allow anyone to own a common carrier such as ComSat. Ownership cannot exceed no more than 49%.
So is it going to be facing some tough regulatory scrutiny?
Well, there are two bills that are currently in Congress right now that are being debated regarding this cap on ownership. It is not proceed until the end of 1999 that these bills may come to fruition and obviously be in favor for this bill, for this acquisition.
So it seems to me that this could be somewhat risky because, as I said in the intro, this is being done in two parts. So let's say if part one goes through and part two doesn't, that could be some inherent problem right there.
Of course, if part one goes through, Lockheed Martin will own 49% of ComSat. If the second half of the issue does not go through, well, they will just remain nearly 50% owners. But otherwise, you are essentially looking at a company that is taking risk in a risky business.
How does this deal look to you as the expert from the financial point? Do you think that it's a good price? Is it going to have some financial problems?
Well, Lockheed is purchasing ComSat at roughly 9 times EBITDA, which is slightly higher than previous acquisitions in defense, but for commercial, I think this could be argued in a favorable manner in that the growth is significant. From a cash flow standpoint, on a near-term basis, Lockheed Martin will not be impacted that greatly, and from an earnings per share basis, it will be mildly dilutive here over the next 18 months or so.
From a synergies point of view, what are the synergies with these companies and this merger? Is it strategically well done?
Yes, from the standpoint of ComSat, what they bring to the table for Lockheed Martin is ground-based assets for providing these types of communication services. This is an area which Lockheed Martin has not ventured, and ComSat is a great fit for it in that they already have satellites and services that are already in place and operable.
Talk a little bit about the changes in the defense industry that actually spawns this kind of merger.
Well, you have to look back into the late 80s where the defense budget started its decline, and we're basically at the bottom of that historic decline. But at the same rate, the defense executives have now started to realize that they need to focus on using their defense expertise in commercial applications. And the area that shows the most growth is commercial satellites, and this is where we stand today.
So you see this then as a turning point for Lockheed?
Yes, it is. It's a turning point, but at the same rate, standing steadfast and competitive from the standpoint that you have Boeing, who has interest in teledesic, you have Motorola, who has interest in iridium. So somewhat of their peers are somewhat already in this particular marketplace.
Well, it should be a very interesting one to watch. We thank you very much for joining us with your expertise on this subject. Glenn Stewart, A.G. Edwards, aerospace analyst. Thank you, Glenn.
Thank you.
What will it mean for Airbus, which the EC has been so concerned about trying to protect?
Well, to some degree, it's status quo for Airbus. They will still maintain around 30% of the worldwide market for commercial aircraft. They will still have their rival to be Boeing, who has been the leader in this business for many years. And to some degree, despite the fact that Boeing is acquiring McDonnell Douglas and their commercial division, it's not that big of a difference, if you will, in the change or the makeup of the aerospace industry.
Much is being made of the concessions reported here that Boeing will give up its exclusive supply agreements with 3 U.S. airlines. It doesn't necessarily mean those airlines are going to buy planes from somebody other than Boeing, right?
Correct. Most airlines try to standardize their fleet, primarily due to the fact that most of their direct operating costs constitutes basically their costs within the labor and training, and as well as maintenance. So yes, most airlines will standardize their fleets, and in this case, if they already own Boeing aircraft, they will maintain being buyers and customers of Boeing.
Am I right in saying that the European position essentially was protectionist? They were attempting to protect Airbus's market share and protect the subsidies which they pumped into Airbus for many, many years, correct?
Yes. Of course, the way that our FTC looks at these type of mergers are primarily from the perspective of the consumer and how the consumer will be impacted. Contrast to the Europeans, they consider the antitrust issues more so of how the manufacturers will be impacted. And that's primarily where the bone of contention, if you will, was at.
Boeing, a long-term buy in terms of its stock?
Oh, we love Boeing. We're accumulating the stock, and we expect that this news will prompt the shares even higher today.
Glenn Stewart, aerospace analyst at A.G. Edwards. Thanks for being with us today to give us some perspective on a big breaking story.
Thank you.